Ever stared at a stock chart on TradingView and seen that big, bold strong buy recommendation, wondering exactly what it means and if you should empty your savings account based on it? You're not alone. It's a powerful signal, but understanding its nuances is crucial before making any trading decisions. So, what exactly is a strong buy in the world of TradingView? It's not just a random thumbs up. Instead, it's a consolidated assessment derived from a multitude of technical indicators. Think of it as a consensus opinion formed by analyzing various aspects of a stock's price action and momentum. TradingView's technical analysis tools consider a wide array of indicators, each offering a different perspective on potential price movements. These can include moving averages, which smooth out price data to identify trends, oscillators like the Relative Strength Index, RSI, and stochastic oscillator, which gauge overbought or oversold conditions, and trend-following indicators such as MACD, which highlights potential trend changes and momentum. When TradingView flags a strong buy, it generally means that a significant number of these key indicators are simultaneously signaling bullish momentum. For instance, the price might be trading above several important moving averages. Oscillators could be indicating that the asset isn't yet overbought despite the upward movement, and trend-following indicators might be showing strong upward momentum. However, it's vital to understand that a strong buy signal isn't a crystal ball. It's a data-driven suggestion, not a guarantee of future price increases. The effectiveness of any technical indicator, and therefore the strong buy consensus, can vary depending on the specific asset, the prevailing market conditions, and the time frame you're analyzing. A strong buy on a daily chart might not necessarily align with the signals on an hourly or weekly chart. Furthermore, relying solely on the strong buy signal without considering other crucial factors can be risky. Fundamental analysis, which involves evaluating a company's financial health, management, and industry position, should always complement technical analysis. News events, economic data releases, and overall market sentiment can also significantly impact price movements, regardless of what the technical indicators suggest. Think of the strong buy signal as a helpful starting point in your research. It can alert you to potential opportunities where technical factors are aligning positively. However, it's your responsibility as a trader or investor to dig deeper, conduct your own due diligence, and consider your individual risk tolerance and investment strategy. Don't let a single indicator dictate your decisions. Explore the underlying indicators contributing to the strong buy signal, analyze the chart patterns, and consider the broader market context. TradingView's strong buy is a powerful tool that synthesizes various technical analyses into a single, easily digestible signal. It suggests a high probability of upward price movement based on the indicators it considers. However, it should always be used in conjunction with your own analysis and a comprehensive understanding of the asset and the market. It's a valuable piece of the puzzle, but not the entire picture. With that said, thanks for watching, and until next time.